Tonight, we're witnessing a seismic shift in global economics. The European Union has announced a historic pivot, redirecting $2 trillion in trade away from the United States to Canada. This isn't just a headline, it's a fundamental realignment of power and trust, impacting millions of lives and businesses on both sides of the Atlantic. Years of simmering tensions and policy disagreements have led to this moment, fracturing what was once an unbreakable bond between the US and Europe. The EU's message is clear. It's prioritizing stability and shared regulatory harmony, no longer viewing the US as a reliable partner. Imagine two old friends parting ways at a crossroads. That's the scale of today's decision. This isn't about tariffs, it's about a loss of confidence and a deliberate decoupling from the American market. The handshake has moved from Washington to Ottawa, signaling a new era in global trade. The transatlantic relationship, once the bedrock of the global economy, has cracked. Old alliances are no longer guaranteed, and the future of global trade is suddenly up for grabs. We'll break down what this means for you, your job, and your future. What does this $2 trillion shift mean? It's not a one-time payment, it's the total value of goods and services now flowing between Europe and Canada instead of the US. Picture a massive river of commerce, once connecting European ports to American cities, now redirected to Canadian hubs like Montreal and Toronto. This is a calculated overhaul of supply chains, investments, and contracts. The EU has signaled to its companies, Canada is now the preferred partner for future growth. That means new contracts for Canadian firms and lost opportunities for American ones. The mechanism, an expanded EU-Canada trade agreement, creating a nearly frictionless trade zone. By aligning regulations and making business easier, the EU is insulating itself from US political volatility. For everyday people, this means European airlines might buy Canadian jets, supermarkets might stock Canadian produce, and tech firms might build data centers in Toronto instead of Silicon Valley. Thousands of these decisions add up, fundamentally altering the flow of global commerce. This is a tectonic shift in international business. Why Canada? The answer is alignment, shared values, stable regulations, and a multilateral approach to global issues. Canada's commitment to climate agreements, predictable policies, and international cooperation makes it a safe harbor in a chaotic world. While the US and Europe clashed over trade and politics, Canada and the EU quietly deepened their ties through CETA. Canada is seen as a reliable partner, honoring commitments and negotiating in good faith. Unlike the policy swings seen in the US, Canada offers many US advantages: skilled workers, resources, advanced tech, and direct access to North America. For European companies, Canada is now the more attractive, less risky entry point. Legal and regulatory systems are more compatible, especially in data privacy and consumer protection. This is a strategic bet on predictability. European businesses need stable rules for decades, not just years. Canada's political consensus on trade offers that assurance. The EU is choosing a partner that speaks its language in policy and vision. It's a move away from volatility toward trust and shared principles. The foundation for this new alliance is mutual confidence and long-term strategy. The impact of this shift won't be felt equally. Some American industries are on the front line. The US automotive sector faces a major blow, as EU-Canada standards make it easier for European firms to source from Canada, sidelining American manufacturers. American agriculture, long a staple of exports to Europe, will lose ground to Canadian farmers whose practices align more closely with EU standards. Tech giants in the US face new competition as European firms turn to Canadian partners for data privacy and cloud services. Investment may flow away from Silicon Valley to Canadian tech hubs like Waterloo and Montreal. Aerospace is also in play. Canadian firms like Bombardier are now better positioned to win EU contracts over American rivals. These changes threaten jobs in US manufacturing, farming, tech, and aerospace. The ripple effects will be felt across supply chains and local economies. American companies will need to adapt quickly or risk losing market share. Canada, meanwhile, stands to gain across multiple sectors. The competitive landscape of North America is being rewritten. This isn't just about corporations, it's about people. For factory workers in Ohio or farmers in Iowa, this trade shift is a direct threat to their livelihoods. The ripple effects extend through supply chains, affecting truck drivers, small businesses, and entire communities. Economic hardship could deepen in regions already struggling, widening the gap between thriving coasts and the heartland. On Wall Street, companies exposed to Europe will see stock prices drop and forecasts downgraded. Investors hate uncertainty, and this announcement injects plenty of it. For consumers, the impact may be subtle at first: higher prices, fewer choices, and less innovation as U.S. firms lose export revenue. The shockwaves will touch everything from pension funds to the price of groceries. The interconnected global economy means no one is insulated from this change. The human cost is real: lost jobs, shuttered businesses, and communities in crisis. This is a story of disruption that will be felt far beyond the boardroom. The pressure is now on Washington. The initial response will be outrage. Expect threats of tariffs and tough rhetoric. But escalation risks a damaging trade war, pushing Europe and Canada even closer. A smarter move would be diplomatic: send envoys, open talks, and address Europe's grievances. This requires humility and real policy changes, especially on climate and regulation. American businesses will lobby hard for action, while others may push for protectionism. The administration must balance competing interests and decide whether to rebuild bridges or double down on isolation. This could be a wake-up call, forcing the U.S. to reassess its global role. Is America first sustainable, or does it lead to isolation? The coming weeks will reveal whether the U.S. chooses renewed diplomacy or deeper division. The stakes are enormous, not just for trade, but for America's place in the world. The world is watching Washington's next move. This realignment reshapes the future for the EU, US, and Canada. For the EU, it's a bold step toward economic independence and regulatory leadership, but not without risk. The hope is that a stable partnership with Canada outweighs the disruption of distancing from the US. For the US, it's a reckoning: lost exports, jobs, and influence, all tied to a foreign policy seen as unreliable. The long-term outcome depends on whether America chooses isolation or reconciliation. For Canada, it's a transformative opportunity: a surge in investment, jobs, and global influence. Canada becomes the EU's gateway to North America, but must manage rapid growth in a strained US relationship. The global order is shifting from a US-Europe axis to a powerful EU-Canada alliance. Other nations will now reconsider their own trade strategies. We're entering a multipolar world where alliances are built on shared values, not just history. The era of American dominance is evolving into something more complex. The world's economic map has been redrawn. For Canada, this is a national jackpot. The trade shift promises an economic boom. Demand for Canadian goods and services will soar. Industries from lumber to tech to agriculture will see new contracts and long-term growth. Job creation will surge, attracting skilled talent from around the world. The government will need to invest in education, infrastructure, and training to keep up. Canada's global status rises. It's now a strategic bridge between Europe and North America. This success could inspire new trade deals with Asia and South America, further diversifying the economy. But challenges remain: managing US relations, supply chain integration, and the risks of rapid growth. Inflation, housing shortages, and public service strain are real concerns. The test will be building sustainable, inclusive prosperity for all Canadians. Canada must ensure the benefits of this boom reach every corner of the country. As the dust settles, global trade enters a new era. Alliances are now based on current values and regulations, not just history. The EU-Canada Pact is the first major example of this shift, prioritizing stability and shared commitments over sheer economic size. For the US, this is a moment for reflection: double down on protectionism or recalibrate and rebuild trust. Rejoining the circle of trusted partners will require consistent, predictable policies and renewed commitment to multilateralism. Other nations will look to the EU-Canada model as a blueprint for diversification. We may see new value-based trading blocs, making global business more complex but potentially more stable. The lesson: economic might alone isn't enough. Trust and shared values are now the true currencies of trade. The EU has bet on these, with Canada as its partner. The US must now decide how to adapt to this new reality. The choices made in Washington, Brussels, and Ottawa will redraw the map for the future of global trade.